Welcome everyone. In this episode, we'll explore Rockhampton region in Queensland. Our goal is to uncover what this area offers and its potential for investors. This isn't crafted by a real estate agent or aimed at buyer's agent for their clients. It's also not produced by a leasing agent for tenants or landlords as a target audience. This content is tailored for an ideal buyer. In this episode, we provide crucial data and detailed specifications about this region to help you decide on your investment journey. We'll discuss not just the data and the dimensions relevant to investment strategies, but also the region's geography and demographies. This comprehensive information creates a solid foundation for investors to understand the region's potential, both current and future, helping you to design an investment strategy for short, medium, and long term goals. First, let's talk about the Rockhampton region itself. It's about 640 kilometers north of Brisbane, situated on the banks of Fitzroy River, approximately 40 kilometers from river mouth. Located alongside the Bruce Highway, it connects much of the Queensland and its major cities. Rockhampton is considered the provincial capital of central Queensland and is governed by Rockhampton Region Council itself. Now we'll explore how this region and its neighborhoods can offer great opportunities for investment with potential for excellent rental income and substantial property price growth, allowing investors to tap into equity and pursue future investment strategies. Overall, the prediction says that the population growth will be 98, hitting 98,000 by 2041. Located in central Queensland, Rockhampton is south of Townsville and Cairns and north of Gladstone City and Brisbane. It's a prime location with a strong economy supported by agriculture, retail, transport, energy, resources, defense, education, and medical research. Note that Rockhampton is not a coastal town itself. It's a prime spot where a lot of trades and activities happen, acting as a hub for professionals in the region. The area benefits from high economic growth factors like the 1.1 billion Rockhampton Ring Road project. The significant infrastructure project has already been approved and early work has started. The federal government has funded about 850 million, and that's its federal government share, and state government has contributed around 280 million in this project. This demonstrates the serious measures taken by the state and federal governments to boost the economy and infrastructure, aiming for substantial long-term growth in the area. Additionally, a $983 million project is underway to build a water pipeline from Fitzroy River to Gladstone City itself, covering much of the Gladstone region in terms of good water supply. The Fitzroy River, a key water source in the region, runs through the city and separates various suburbs on both the sides. As investors or buyers, for the matter, we should definitely consider how this geography of Fitzroy River, its influence in this region, especially on river's history of flooding. It has significantly affected Rockhampton, which is why suburbs north of the river, like Norman Gardens and Frenchville, for that matter, as seen as the safer options. Not all houses and streets near the Fitzroy River are at risk of disaster events, but buyers need to perform their own due diligence. Beyond that, the economy also benefits from other sectors like agriculture. Central Queensland agriculture industry is worth of 1.7 billion, with cattle and cows making up 1.2 billion of that industry, and broadacre crops worth 420 million. The Fitzroy region produces 46% of Queensland peas, 43% of state beans, 41% of its rice and 47% of table grapes as well. The agriculture industry heavily influences the region's economy, significantly boosting its growth. Additionally, the Australian Defence Force conducts extensive training in a place called Shoalwater Bay, which is 75 kilometers northeast of Rockhampton region itself. These international military exercise involves around 30,000 personnel annually, contributing to 40 million to the regional economy each year. Australia has also signed a $2.5 million deal with Singapore to fund the infrastructure upgrades and high-tech military hardware near Rockhampton. This diverse economy activity is a key driver of growth in the region. So if you look at the distance between Rockhampton and where these investments are happening, you would see that it's in the proximity. It's not that far, and that's where the influences of these economic growth on this region, which is also a promising feature for the investors. Apart from the ring road project worth 1.1 billion in revenue, Rockhampton Airport, managed by Rockhampton Region Council, serves the city of Rockhampton and central Queensland with regular flights to Brisbane, Gladstone, Mackay, Townsville, Cairns, and also the Gold Coast region. Of the 750,000 passengers on average year on year who uses the airport, 60% are business travelers. Unlike other regional airports, it doesn't rely on fly-in, fly-out workers. The airport is conveniently located close to the city as well. So you have the airport, and it's also close to the city. It has great connectivity in and out of the city, giving us a broad view of interesting economic drivers that influence the market. Now let's explore the factors that make the property a good investment on from this region. So let's talk about the rental vacancy rates as such. The region is trying with super low rental vacancy rate of around 0.5%, meaning properties are vacant for less than 2 days. Basically, when you buy a property and put it for rent, it's snapped up quickly because there's a huge demand from the renters. The property bought in the initial stage enters into the tenancy through the agreement secured with the bond and rental advance, and that's where the tenancy is in place. This all happens in 2 days, and that's where we are seeing high demand in the rental market, and thereby driving the investors um, to make this region as the hot market. At the same time, some areas do face challenges in terms of rental tenancy placement because of the other factors such as housing commission, flood risk, and accessibility issues. So it's all left to the investors and the buyers to make the right due diligence in conjunction with working with the property managers in in getting the right property for the rental income that they are after. From Norman Gardens in the north and Frenchville in the northeast to Kungal and even Lakes Creek further in the south, the market is sliding in the same trend in terms of the rental market demand, all the way into the suburbs like Park Avenue, Kawana in the central region, and across the river in the areas like Warndale, Rockhampton City, Depot Hill, The Range, and West Rockhampton. However, in this discussion, we are not covering suburbs like Gracemere or, or Peakhurst, which are further north of Rockhampton, and it has its own pros and cons. So let's delve into deeper onto the renter proportion. Gracemere is located south of Rockhampton City and has seen some price appreciation and growth. However, other factors that are limiting their growth, and my study won't cover those specific suburbs. In the region around Fitzroy River, rental proportions are around 30 to 40%, which is decent. Additionally, the population has diversified with 21% of professionals. That's on par with many other with the proportion that we look in the state average on that sector. This indicates that the health of the economy is driven by these professionals, which creates a stability in the rental income and social economic factors, driving steady investment growth. For example, in suburbs like Berserker next to Park Avenue, the vacancy rate is 0.49% with a rental yield of 6.18%. Park Avenue has a yield of 5.99%, while Frenchville and Normal Gardens have yield of 4.78% and 5.12% respectively. The lower rental yields in Frenchville and Norman Gardens are due to significant price appreciation, reducing the rental yield but still contributing to overall growth across these suburbs. Norman Gardens and Frenchville have already undergone gentrification, making them attractive to the investors. However, Berserker suburbs like Kawana, Kungal are still in the process of gentrification. Therefore, buyers should conduct thorough due diligence before investing in these areas. The median price in the region range from around 300,000 to mid 500,000 mark at the moment, as at the time of recording this video. Frenchville has been a preferred suburb for by the investors since 2021, resulting in higher prices compared to other areas like Norman Gardens. The price growth in this region is very strong, nearing to 20% year on year. This shows that price growth is substantially high. Will it continue? Growth remains high, it signals strong potential. The region's economy is driving due to substantial investments and making it attractive for both short-term and long-term investors. These investors can benefit from strong rental yields moving from negative to positive gearing faster than in any other parts of Australia. The key question here is, do we have any other region as good as Rockhampton from the outlook of positive investment potentials? The Rockhampton Ring project, which is $1.1 billion worth, which is funded by both state government and federal government, won't be completed for at least a year or two. It's in progress. The Fitzroy to Gladstone on water pipeline costing 983 million is positioned for completion in 2026, bringing many professions to this area. The North Rockhampton sewage treatment plant upgrade, costing $75 million in dollar value, is under construction with completion expected by June 2025. The Gracemere to Mount Morgan water pipeline costing 40 million worth of dollar value is also under construction. From a defense perspective, the Shoal Bay training area is undergoing a $2.5 billion upgrade expected to be completed by 2024 and 2025. In the resources and energy sector, the Clark Creek renewable energy project, valued at $3 billion, is under construction and should be finished by 2025. The Mount Morgan tailings processing and rehabilitation project, worth of 100 million, with $66 million fund injection by the federal funding, is underway. This is driving up the property prices in Mount Morgan residential areas as well. Additionally, we have a $1 billion construction project that's been approved in Lotus Creek wind farm project is also underway. The Mount Hopewell wind farm, valued at 750 million, is also approved and being built. The $550 million worth of Smoky Creek solar power station is also under construction. Gracemere Industrial Park, costing around $75 million value, is currently under construction in Gracemere. With all these projects combined, we are looking at around $5 billion worth of developments over the next 2 3 years around this region. This is an ideal time to enter the market to benefit from the rental growth and price appreciation. Our strategy and growth could outperform Australia's national average of 7.7% year on year over a 10-year span, making this as a great opportunity for investors. So this strategy is why all investors use data, combining it with information from the public information that we get from the state websites, federal and council website to make the right market decision, especially about the timing. This explains why vacancy are low, prices are high, and why it's tough for buyers to enter into the market. Smart investors analyze this data to identify prime locations for the best investment opportunities over the next 2 years, possibly the best in all of Australia. And that wraps up my coverage. So, why did we choose this region? What does it offer us as investors? How is government funding and other initiatives influencing us as investors in the investment strategy that we are aiming for? Being a player in this market, this will definitely help us grow and improve our portfolio on long term. I'm Varun from Future Secure Advisory, where we help customers with their growth and investment strategies. Thank you.